You clicked submit, the pop-up disappeared, and you felt responsible. Maybe even virtuous, updating your income exactly like they asked. Serve you better, they said, in a server farm you will never see. An algorithm just recalculated your worth, but not as a person. It calculated your exact value as a profit source. The number you entered became ammunition, handed over voluntarily. That distinction alone should honestly make you furious. When something is legally required, you have no choice. When something is requested, you actually do have a choice. Banks deliberately blur that line to protect their own profits. Think about what happened when you submitted that income number. Your profile got flagged and algorithms started running calculations. Calculations you will never see, but will absolutely feel. Your stated income became a data point for your future treatment. Not just whether you get approved, but what interest rate you pay. Interest rate determination is where income data gets weaponized. You might assume higher income leads to lower rates. After all, higher earners are lower risk borrowers, right? The reality is always a lot more complicated than that. Banks use income data to determine what rate you will tolerate. Someone earning $200,000 might get a higher rate, higher than someone earning $60,000 for the same card, because the algorithm calculated that the higher earner will accept it. They are not pricing your risk, they are pricing your tolerance. Every time you update that income field, you feed the system. A system designed to extract maximum profit from your financial behavior. The pop-up on your screen was not customer service. It was just data harvesting disguised as helpfulness. Banks convinced an entire generation that sharing income is normal. They slip income questions into applications, like asking your zip code. They send friendly update requests with language about serving you better. They make the whole process feel incredibly routine. Most people never stop to ask why they want this number. And what exactly happens when they finally get it? You thought transparency would help you, and honesty would be rewarded. You thought updating your income was the responsible thing to do. That belief was entirely built on a massive lie. Banks want your data to make money from you, not with you. The pop-up will appear again because it always does. But now you know what happens behind that friendly little form. Picture someone pulling in $200,000 a year. On paper, that person should be the bank's favorite customer. Low default risk, stable cash flow, a borrower lenders fight for. You would assume they get the best rates and lowest fees. They do not. They actually get charged measurably and provably more. And the reason has absolutely nothing to do with risk. It is all about a single number they typed into a form. Here is the math that should make your stomach turn. When an algorithm sees $200,000 in that field, it calculates something far more profitable than default probability. It calculates your price sensitivity, which is highly lucrative. The system knows you will not spend Saturday comparing lender rates. It knows you probably will not notice a few extra percentage points. So the algorithm nudges the rate up, just enough to hurt. The industry calls this ability to pay pricing. The more you can afford, the more they extract from you. Not because of risk, but because data says you will not fight. Now flip the lens. Someone earning $60,000 logs in. Different income, different trap, with no premium investment pitches. Their dashboard fills with balance transfer, offers laced with hidden fees. Personal loan promotions with interest rates that make pawn shops blush. Unsolicited credit limit increases timed perfectly for holiday spending stress. The bank is not trying to help them build wealth. It is engineering opportunities for them to overspend, because data says they will. And then there's the person at $180,000. The algorithm has a very specific plan for them. It knows they will likely accept a $550 fee. So every login becomes a gauntlet of premium card offers, insurance bundles, and investment products with layers of hidden fees. Each pitch calibrated not to their needs, but their income bracket. The bank is not guessing. It ran the numbers before loading. 3 different incomes, 3 different extraction strategies, 1 shared reality. Every single one of those people handed over a number. And every single one of them is now paying a hidden price. A price they never agreed to, and probably do not even see. But the part that should genuinely unsettle you is what happens next. That income figure you entered 5 years ago is still active. Still in your file, still feeding decisions about your interest rate. whether to quietly reduce your credit limit when the economy wobbles, or flag your account for closure during uncertain financial quarters. You gave them a snapshot of your life, half a decade ago, and they are still using it like it was taken yesterday. Banks do not forget, and data does not decay on their servers. And here's where the math gets truly absurd. Mortgage applications require hard proof like pay stubs and tax returns. That is federal law born from the wreckage of 2008. Auto lenders usually verify too, though standards vary by amount. But credit card companies do not verify the income you report. They cannot pull your tax returns and have no access to pay stubs. They rely entirely on whatever number you type into that box. They want this data badly enough to ask for it constantly, but they do not want it badly enough to confirm it is real. They built an entire pricing architecture around an unchecked number. So a recession hits, a real quarter where unemployment ticks up. Somewhere inside your bank, a risk model wakes up and starts sorting. It pulls your file, seeing the income number you volunteered months ago. Based on that single data point, the algorithm makes a decision. Maybe it slashes your credit limit at 2 in the morning. Maybe it flags you for a massive interest rate adjustment, adding $900 a year to your carrying costs. You will never see the calculation and never be told why. You will simply log in and discover your financial life has changed. And the number you handed over is the exact reason why. Now think about what just happened. You earned that income. You reported it honestly because a pop-up promised better service. The bank took that number, feeding it into a blind system, using it to decide how much profit to extract from you. Right, during the exact moment you could least afford it. That is not a service relationship. That is an ownership structure. And you are definitely not the owner. This is where the real sorting happens. Not between rich and poor, but between those who understand and those who keep handing over more. Picture two people with the exact same credit score and spending patterns. One clicked that income update pop-up every time it appeared for years. Went from 70,000 to 95,000, feeling good about it. Felt like the bank should know they were doing well. The other person closed the pop-up every single time without typing a word. 3 years later, the first person is drowning in premium product offers. Their credit limit got bumped twice without even asking. The bank sees growing income and reads it as growing opportunity. A wider margin to extract fees, upsell products, and test pricing tolerance. That person thinks they are being rewarded, but they are being farmed. The second person gets generic mailers and a stable credit line. The algorithm has less to chew on, so it leaves them alone. Their terms stay flat and their exposure stays controlled. Not because the bank is being generous with them, but because the machine cannot calculate a confident harvest without fresh data. Here is the part that should really sit with you. The information asymmetry in this relationship is not a side effect. It is the actual product they are selling. The bank knows your spending patterns, payment timing, and debt ratios. It feeds all of this into models that predict your behavior. You, on the other hand, know nothing about how data gets weighted. You do not see the algorithm, and you do not know the thresholds. You cannot appeal the categorization in any way. You are playing a game where one side holds every single card, and the other side keeps voluntarily showing their hand. So the question is not whether you trust your bank. It is whether you understand what your bank actually owns. Because the moment that income figure enters their system, it is theirs. It becomes an input in a model designed to maximize their return. Your raise, your side hustle, every dollar of upward mobility you fought for, gets converted into a variable that adjusts how aggressively they price your loyalty. The effort was yours, but the asset it created belongs to them. Your only lever left is how much raw material you keep feeding them. Feeding a machine that was never built to serve you. The first time you close that income update pop-up, something strange happens. Your hand hovers over the button, and you hesitate. A small voice whispers that maybe you should just answer it. Maybe they need this information for something important. Maybe there is a reason everyone else complies. Nothing happens, the pop-up disappears, and your account loads normally. You pay your bill, log out, and the world continues spinning. No red flags appear on your account, and no angry emails arrive. 3 months later, they will ask again with the same pop-up. Same friendly language, same pre-filled form, waiting for fresh numbers. Close it again, and still absolutely nothing happens. 6 months after that, they will try once more, so close it again. Eventually, the requests space out as the algorithm learns you are useless. It stops wasting resources on you, redirecting energy toward cooperative targets. This is the entire method, plain and simple. When a bank asks for income information outside of a loan application, just close the pop-up, do not explain, and do not apologize. Do not feel guilty, just close it and continue with your day. That is it. That is the whole mechanical action. It takes 2 seconds and requires zero financial expertise. It demands no complicated planning or strategy. You are not restructuring your portfolio or opening offshore accounts. You are not hiring lawyers. You are just clicking a button. Clicking an X instead of filling in a number. Your relationship with the bank shifts from active target to background customer. You become boring to their systems, which is exactly what you want. Most people never realize they even have this option. They see a form and their brain automatically switches into compliance mode. The bank asked a question, so they answer it. The pop-up appeared, so they must need to fill it out. Authority figures trained us well, conditioning us since childhood. Conditioned to provide information when requested by institutions. Breaking that conditioning feels incredibly uncomfortable at first. Your brain will generate reasons why you should comply. What if they lower my credit limit or affect my account standing? What if I need something later and they remember I did not cooperate? A friend learned this lesson the hard way. She updated her income once and spent months drowning in aggressive marketing. When she finally stopped responding to update requests, the noise faded. Her account returned to normal, and the bank did not close her card. They did not reduce her limit, and they did not flag her file. They simply stopped trying to extract fresh data and moved on. She now has a strict, personal rule. Never update income unless actively applying for something that requires it. Credit card annual reviews. Just close the pop-up. Random account checkups or friendly emails asking to verify information. Delete them without opening, every single time. This rule saved her from countless algorithmic recalculations. Recalculations that would have benefited the bank at her expense. You can adopt the exact same rule right now. It requires no preparation, no research, and no financial advisors. Just a commitment to one very simple behavior. When banks ask for income data you did not volunteer to provide, close the request and move on with your day. This might sound way too simple to matter. How could clicking an X instead of typing a number make a difference? Because banks built entire profit optimization systems around fresh customer data. When you deny them that data, you throw sand in the gears. Not enough to break the machine, but enough to make yourself less profitable. The less profitable you appear, the less aggressively they pursue you, meaning fewer opportunities to sell you products designed to generate fees. Fewer products mean fewer chances to make expensive mistakes. Fewer mistakes mean more of your money stays in your pocket, instead of flowing into their quarterly earnings reports. One small action, 2 seconds of your time, and zero risk, with a measurable benefit over months and years. Start today. The next time a financial institution asks you to update your income, outside of a formal application process, just close the pop-up. Do not overthink it, do not justify it, and do not explain it. Just close it and watch what does not happen. 6 months from now, you will open that same banking app. On a Tuesday morning, coffee's still too hot to drink, and a familiar pop-up will slide into view, asking to update your income. You will close it in under 2 seconds, with no hesitation. No pulse change, and no wondering whether something bad follows. You will pay your bill, put your phone down, and forget about it. That is what the other side of this looks like. Not wealth, and not some secret advantage that doubles your net worth. Just a quiet, unremarkable moment where an institution asked you for something. And you said no, and the world kept spinning exactly as it was. Now picture what the bank sees on their end. A data field that has not been refreshed in 2 years. An algorithm that keeps pinging your profile and getting nothing back. A risk model running on stale inputs, defaulting to conservative assumptions. Your credit line and your interest rate stay exactly where they are. Nobody calls you with a special offer calibrated to squeeze your spending habits. The system just quietly moves on to the next customer. The one who filled in the box, giving the machine something fresh. You did not. And that absence of data is doing protective work. More protective work than any budgeting app you have ever downloaded. Here is what this actually looks like in practice. Think of these not as financial tips, but as the smallest possible moves. Moves that cost you nothing and remove nothing from your life. When you apply for a new card, yes, you put a number in. That is the price of entry, and it is perfectly reasonable. But you do not hand over your best quarter. You do not add up every side gig and freelance check and round up. You report a number that is honest and conservative, because the approval algorithm does not need your ceiling. It needs a floor. When that existing card sends you the pop-up 3 months later, close it. You do not owe them an update, and your account will not freeze. Your autopay will not skip. The pop-up will just vanish. It will reappear in another quarter, and you will close it again. Nothing will change except the bank has one less data point. When they offer a credit limit increase you did not ask for, pause. Pause before you feel flattered, because that offer is not a reward. It is a door they want you to walk through, so they can photograph absolutely everything inside. If your current limit handles your life, just decline it. The decline button is right there, and it does not trigger a review. It does not flag your account, it simply tells the system no. You are not interested in handing over fresh income data. In exchange for borrowing capacity you do not even need. And when a voice on the phone asks you to confirm personal details, remember that the phone call itself is an environment engineered for compliance. The human voice, the slight urgency, the implication that this is routine. You can say no thank you and just hang up. The call ends and your checking account does not even notice. None of this will make you rich. I want to be completely honest. Closing a pop-up does not compound into a massive fortune. Declining a limit increase does not generate passive income. There is no exponential curve hiding inside these small refusals. What compounds is something harder to measure, but far more durable. Every time you decline an optional data request, you reinforce a boundary. A boundary between your financial life and the institutions profiting from it. And that boundary gets easier to maintain each and every time. This is not about fighting banks. They provide real services. And at the end of the day, your deposits are insured.